What up, guys, and welcome to the coffee shop. This is your host, baristo Eric, and I'm here to give you something, a little study tool, right? You see something on my chart, and it's just kind of, it's for you people that have a lot of trouble understanding whether you have a good uptrend, a good downtrend, whether you have a strong or a weak one, right? Here's a weak one, and then here's a strong uptrend forming here, like lined up moving averages, strong uptrend, right? I see that they're lined up. Why am I saying they're lined up here and they're green at this point? So I created an indicator called trended and blended. Okay, you'll see why in just a little bit. Let me kind of zoom in here. Okay, let's come a little closer, get a little closer. There we go. So you see here that we have mixed up moving averages, right? I marked it. These moving averages are mixed up, and that means your price is going long while your moving averages are coming down. So you're going long with price, but your moving averages are red. So that means you have a weak uptrend, okay? Weak uptrend. And here you have bullish candles forming, larger and larger, but your moving averages are lined up, but they don't change to green until here. Okay, I need you to understand something. Just because you have moving averages in an uptrend does not mean you have a full uptrend. You have to realize that all of this, the price breaks above, you don't have a true uptrend on this time frame yet. You have an uptrend on a smaller time frame. So when you get this cross up, you can always drop down to a smaller time frame and start catching this move up. However, this is simply going to help you understand whether you have a strong uptrend or a weak uptrend, and that'll tell you should you get out at previous price swings. Like you cross up here, look for a swing, you cross over here, look for a swing high, right? Look for a swing high. That's what you're going to be doing. Let me try to draw this the other way. This candle breaks, you're going to get out of the swing, right? This candle breaks. If you go above this, you can look for the next swing high right there. Okay, and if it breaks that level, it does so here, look for the next swing high. There's a swing high right there. Okay, price keeps breaking these swing highs, and that's how you do a scalp move, right? But there's something here that tells you in this point, like, see, not yet, not yet, not yet. This is a fast and a slow moving average. You can set it for whatever you want, but I did something a little bit different here to tell you strong or weak uptrend or whatever the case may be. Oh, hey, wait a minute. You can't see me. How about we, let's do this. Hang on, there, and then boom. What's up, guys? How you doing? Let's take this off and let's get down to business, right? So here we go. I did something special here for you guys. Now, this is a simple set of moving averages, and they colors themselves green when you have a nice lineup of all three moving averages. Three moving averages. It's not two. There's three moving averages. You'll see in a minute. And they line themselves up red when they're all upside down, and you have a nice, price action going downward. This shows a downtrend. So what are you looking for? This is how you can tell you do not have a strong uptrend. You don't have a strong uptrend. You're closing above these moving averages. And this fakes people out, okay? This is how you know you don't go super long. You can't really get anywhere. You're not going to get too far. Price just moves a little bit, and then it cascades back down. Wouldn't it be nice to know, right? Wouldn't it be nice to know that when you start breaking your fast moving average here, wouldn't it be nice to know that all of this is still a downtrend and all you're doing is catching a pullback? So when you break above, you know that you're going to have a lower high. See, look at this high here. It's actually lower than this high. So if I take this off, watch carefully. You have a high here and a high here, right? Okay. Well, this high is higher than this high. You can see, let me just draw a horizontal line here. There, see? This high is lower than this high. So you still have a downtrend, which means when you broke bullish here over your moving averages, you are still respectively going to have a lower high. So you should be looking for the downtrend moves. Now, what is the point of that? Okay. If you are trading with the trend and you have a nice strong trend, what you'll end up having is a nice, let's talk about a downtrend, right? If you break short in a downtrend, then you would have a nice long move down. But if you break long in a downtrend, okay, that means you have a lot of force pushing against you. It's going to move very quickly and then come back. See, very quickly and have a nice long move down, which means if I'm just looking at price action, I'm just looking at it. Very long downtrend, very just like abrupt, right? It's trying to move up. Long, nice move down, long, nice move down. This, from a price action perspective, tells me that I am in a downtrend. I don't need the indicator to tell me that. But for those of you that don't have the experience, this is going to help you out a lot. So what's so special about this indicator? It's called trended and blended. I decided to use some of the special code that is from pinescript called color from gradient. And it's coloring your candles as well. You don't see it because I didn't turn it on. But I also did this moving average coloring so that only when they're lined up is it giving you the actual trend. Now this says that they're lined up green, but you can see the price action is not cooperating with that green color. However, it is cooperating here. Look at the color of these bars. Watch. Here. Now, why does this red move well, but this green does not move well? It's because I don't have just 2 moving averages here. I have 3. That's why this says not yet, right? Here. Now, you can see I have a fast moving average, a medium moving average, and a slow moving average. This slow one will be the overall trend. The overall trend is still coming down, okay? These moving averages are lined up in a downtrend below the overall trend. So you have a nice push down here. But this, right, you're breaking short. This is an anomaly. You most likely have a divergence here, okay? I'm going to guess that the divergence is like right here, somewhere right there. You probably have a lower high on your RSI at this point. And it just gives you this nice cascading downward move. I'm not going to get into that part right now. But either way, this helps you understand whether you have a good trend or a bad trend, right? Now, perfect example is here. See, the candles color themselves. They start changing color. They finally switch to green. And they're already green when your moving averages line up to green. So what does that mean? You have a nice strong trend. Here, your candles close above both your fast and your medium moving average. They finally get above, which means you have a weak uptrend. You should only be trading to a support resistance level, a swing high, stuff like that. So when you have a weak uptrend, which would be red going up, okay? Red going up would be a weak uptrend. Green coming down is a weak downtrend, okay? But green going up with green below it, that's a strong trend. And again, you have a strong trend down right here. And look what happens. Very long move down. Big, abrupt push against it. And again, nice long move down. Keeps changing red, keeps changing red, keeps changing red. So there you go, right? Now, this is always best to use in confluence with other indicators, okay? I have my own version of a super trend type cloud that I'm adding to the Thripple, which will be coming out in later days. But you can see, if I turn it on, you can see how well it nicely lines up. The Thripple super trend has 2 areas of support and resistance. One is the short term and one is the long term support and resistance. So you have this area, this less transparent green area, right? These immediate colors, the red and green, the immediate ones next to price. These are the short-term trends. When your price breaks through your short-term trend, you have a weak trend. So here, I have a weak uptrend. I broke north, I broke bullish through the short-term bullish resistance. So I have a weak trend here. It's automatically telling me. It's also give me a point of which I can trade to, most likely, right there. I should be able to get to this point, right? Then, as price plays out, it finally breaks through the short-term and the long-term resistance. It broke through both of it. So now I can choose a different exit strategy. Let's see, we could just take the Fibonacci tool, right? I break here. I'm looking for the start of the move, which is here, right? Take this one. I'm going to go to the close of this candle, and judging by the RSI value, which is showing up right here, RSI value, right, of this candle, it's a 20. So I should be able to get to take profit 3, right? I go right up here to the top of the candle, right there. Take profit 3 right here. There. Gets me right out at the top of the move. Nice little setup that I'm creating. But the point is, using those 3 levels on the Fibonacci tool, remember what I told you, this is against the trend. This is ranging, and this is with the trend, right? Okay. So that means if I've broken out from the long-term and the short-term resistance, I no longer have resistance working against me. So now I have a true trend. This gives me the early indication of a true trend. Now, I know what you guys are going to ask me. What is the settings for the moving averages? You can set them for whatever you choose, and the trend analysis will take place for you. So you could set it for the 10, 28, right? I'll set this for a 50. You could set it for that. You can see that candles change, right? They automatically change. So this is telling you, according to a 1028 strategy, your trend starts here, right? But if you like different lengths for moving averages, you can adjust it. I don't know, just pick whatever you like. Some people use a 9, a 14, and they still use a 150, which is kind of crazy for me, but I don't really do that, right? So there you go. Your trend starts here in an uptrend. This would be a weak uptrend. This would be a weak downtrend. You break underneath both of your moving averages, you have a weak downtrend. But you can see how, especially here, this candle is in between the red and green, right? It's the candle that's changing colors, midway. So I hope that helps you guys out a little bit. Again, you can do this very nicely without the triple. You don't need all that. I'm going to take all this off. There you go. All right. Yeah, and basically you can go anywhere in the chart. You know what I like to do? It's going to kind of scroll back here, and I'll wrap up this video. Oh, look, we're right there. I'm not going to do that. We'll go here, cut the chart, do this, and let's bring this down here, right? There. So according to this, let me set it for what I like to use. Let's go with the 1028, right? 1028. Let's use the 50 down here. Okay. Now, I'm starting to bunch up around my moving averages, right? So my strong uptrend started here. I was green, lining up. Oh, sorry, here. They all lined up, and I closed above them. Like I said, when you close bullish through all 3, lined up moving averages, you have the beginning of a strong uptrend, right? So this looks like here, this is still like a continuation of a small uptrend right here. Let me do this so I can see the difference between the moving averages. The fast one will be skinny, the mid one will be a little bit fatter, and the slow one will be bigger still, right? So what I'm looking at is, here's the fast one, here's the medium one, here's the slow one. So I've broken bullish. Nope, this is bearish, this is bearish. Now I'm bullish here. I'm bullish on this candle. Okay, so let's see how this works out with this little right there. And then I have a swing low. This is my low right here. I'm actually on a perpetual market. Wait, am I? I am on regular market. So I'm going to go for the swing low. Perpetual markets, you have to go for the closes. RSI value is, let's see, 4.1. So there's a 1 to 2.4, right? 2.4. And that should carry out right to there. Okay. And that's the easy way out of it. All right. Thanks. Stopping at the coffee shop. The indicator is with TradingView right now.